They call him the Oracle of Omaha. And at this year's Berkshire meeting, Warren Buffett made it crystal clear. If you are betting on China, you're playing the wrong game. In his plain language, Warren Buffett basically told the world, when it comes to value investing, the US is untouchable, Japan is untouchable, and China, avoid it like plague. Now, Buffett's love affair with America is well known. He didn't mince words. He threw a little shade at Trump's tariffs, worried out loud about America's debt, even grumbled about the US dollar. But at the same time, he couldn't stop professing his love for America. He literally said, if I were born today, I would keep negotiating in a womb until they let me be born in the United States. That's his words. And it's not just patriotism. It's Buffett telling you the biggest unfair advantage on earth is being born American. So when people asked if Trump's comeback meant revolutionary changes, Buffett shrugged. No, not revolutionary, just politics. Even the stock market's tumble in April, down 15%, he laughed it off. Not a dramatic bear market, he said. If you think that is a big deal, Buffett's advice is to change your investing philosophy, not the market. Translation: America's best days are still ahead. The man is sitting on $350 billion in cash, waiting to pounce, while everyone else is panicking. Buffett's worldview is crystal clear. America is the sun. Everything else orbits around it. Sure, he once dipped into China. He put money into BYD, into PetroChina. But as US-China tensions heated up, he pulled back. Why? Because for an American billionaire, betting on China is like playing poker in a room full of card threats. The deck is stacked. The rules change mid-game. And the referee works for the house. Too much risk. Too much spotlight. And when asked directly what he would buy in China today, his answer was brutal. Nothing. He did not elaborate, but I think here's why. One man, Xi Jinping, can erase trillions of dollars in market value with a signature. Remember 2020, Jack Ma gave a mildly spicy speech, and boom, the Ant IPO, the world's biggest, was killed in 48 hours. Then came the regulatory assault. Alibaba, Tencent, Didi, hammered. Trillions of market value evaporated. Who got burnt? Temasek, Singapore's crown jewel of investing. SoftBank, Masayoshi Son's empire torched billions. Foreign funds who thought China tech was the next Amazon, all crushed. And Buffett? He wasn't anywhere near it. Why? Because he knows Xi's regime is a wealth killer. The rules are made up, and they change mid-game. That kind of arbitrary power terrifies a man like Buffett. His whole philosophy is built on predictability, trust, the rule of law. China offers the opposite, rule by decree. Buffett's mantra has always been simple. Don't invest in what you don't understand. And when it comes to China, he admits it. He doesn't understand the rules of the game, refereed by Xi Jinping. And let's be real. Even if you are Warren Buffett with decades of investing experience, how do you trust financial statements coming from China when accounting scandals pop up like mushrooms after the rain? In China, fraud isn't the exception, it's a business model. And for a value investor like Buffett, cooked books are the kiss of death. No numbers means no trust and no investment. And it goes deeper. Buffett just doesn't see a real competitive advantage in China. 30 years of breakneck growth? Sure, but it was built on cheap inputs, cheap labor, cheap land, cheap resources, sweatshops, not Silicon Valley. And that model is now dead. The demographic dividend is gone, the workforce is shrinking, cost of everything are rising, energy and water are scarce, extensive growth, just throw more bodies at the problem, doesn't work anymore. And what's left? Innovation. But real innovation takes risk, property rights, freedom to fail. And let's face it, China's system punishes risk, steals IP, and suffocates creativity. Result? Chinese firms are stuck at the bottom of the value chain. No global brands, no breakthrough tech, no dominance in core industries, just endless copycat catch up while others sprint ahead. And even Beijing admits it. Our industries lack competitiveness because we lack innovation. That's Xi Jinping's words. So when Buffett shucks off China, it's not just one stock, it's the whole story. He's basically saying that China isn't where the smart money goes because he doesn't bother to go there. Now compare Buffett to Ray Dalio. Dalio has been one of China's loudest cheerleaders, practically auditioning to be Beijing's PR rep on Wall Street. He wrote books about the changing world order and how China's rise was unstoppable. He told investors to diversify into Chinese assets. So how is that working out? Not great. His China funds massively underperformed. Anyone who listened lost money. And while Dalio was singing love songs to Beijing, Buffett was quietly trimming his BYD stake and not adding one more penny into China. And the scoreboard doesn't lie. Buffett preserved billions. Dalio's followers got wrecked. And let's not forget the elephant in the room, Taiwan. If she's foolish enough to invade, Chinese equities will meet the same fate as Russian equities after Ukraine. If you remember, overnight, Russia's stock market went dark, trillions wiped, foreign investors frozen out, forbidden to sell, portfolios turned into hostage notes. You think global funds will ignore that risk in China? Not a chance. The Taiwan invasion scenario hangs like a dark cloud over every Chinese stock. And it's the ultimate geopolitical discount. Who in their right mind would tie up capital in assets that could vanish the day she gives a speech about invasion? Buffett sure won't. Now, enter the Japan exception. Buffett loves Japan. At the shareholder meeting, He couldn't stop praising the big five trading houses in Japan: Mitsubishi, Mitsui, Itochu, Morabini, Sumitomo. And someone asked if he would dump Japanese stocks if Bank of Japan raised the rates. He smiled and said, "We are holding these Japanese firms for 50 to 60 years. 50 years. That's not just value investing. That's practically marriage vows." And get this, Berkshire has already put $20 billion into Japan. But Buffett admitted he wished it had been $100 billion. That's how bullish he is on Japan. And why Japan? Why now? You might be scratching your head. Japan? The aging, shrinking, stagnant Japan? The country everyone loves to call finished, 3 decades lost? Buffett's answer is simple: cheap money, cheap stocks, and a system built for stability. Cheap money. Japan has been living a zero-rate wonderland for decades, and Buffett basically borrowed yen at 0.5% to 1%, turned around, and bought stocks that pay 4 to 5% dividends. Add rising stock prices and currency arbitrage, and boom, 10 to 15% annual returns. And then the stocks are cheap. Those trading houses he bought, PE ratios around 10. Dirt cheap compared to the US. Stable structure. These aren't just companies, they are trading empires. Conglomerates spanning trade, finance, logistics, investment. They cross-hold shares, generate dividends, and operate like semi-monopolies. Put simply, Buffett basically bought the Japanese versions of PetroChina, China State Construction, and ICBC, but without the political landmines. And don't forget, Japan looks undervalued. At its peak, Japan's GDP was 72% of America's. Today, barely 1/7. In 1994, Japan's per capita GDP was 1.5 times America's. Now, it's not even 40%. Disposable income once reached 85% of US levels. Today, it's 25%. Sounds like decline, right? But Buffett doesn't buy it. He thinks a lot of this is just smoke and mirrors. A deliberate currency suppression by BOJ that makes Japan look weaker than it is. Which means, in his eyes, Japan is a bargain waiting to be scooped up and ignored for too long. Now, what does this all tell us? Buffett is still betting on developed capitalist nations. He doesn't believe in the so-called East rising, West declining, propagated by CCP. He believes the West still runs the show. America is king. Japan is the royal sidekick. China? For Buffett, China is a casino where the house always wins. And he, as a value investor, doesn't play games he can't win. So, let me leave you with this. Buffett is sitting on $350 billion in cash, waiting like a hawk. And when he looks out at the world, 2 places stand out and shine bright enough for him to commit half a century of capital. That's real long-term money. One is the country he would literally negotiate in the womb to be born in. The other is the country that plays royal sidekick to that empire. Everyone else, especially China, As far as Buffett is concerned, enjoy the scraps.